Hello nieces, hello nephews, it's your Uncle Charters here, and today I wanted to talk to you guys about some trading concepts that I use in my trading every single day, and it should help you guys to understand what Uncle Charters be saying every day in his YouTube videos, okay? So first thing I want you guys to take a look at is what my nephew the Charters created, a little cheat sheet, very simple, very extra simplified, okay? You want to buy calls or go long? Is it at support? Ask yourself that, right? No, don't buy. Yes, equals a buy. If you want to buy puts or go short, is it at resistance? That's what you want to ask yourself anytime you're thinking about buying puts or going short. If it's no, don't buy. Yes, equals buy. Okay? You cut loss when support fails. You cut loss when resistance fails. You got to manage your risk because the strategy is not 100%. Okay? So with that being said, this is too simple, okay? We need a little more logic within this, I guess you can call algorithm or trading strategy, okay? So that's what I want to talk to you guys about today. And of course, I'm going to be using the SPY because I love trading the SPY. It's I don't have any real fundamental special reasons why I trade the SPY or anything like that. I just love to trade the SPY, okay? So the first thing I want to talk about, okay, is the back test and go strategy that I tend to talk about or mention from time to time, okay? Now, back test and go, the word back test is not one word in my version of it, okay? In my version of it, it's not one word together. It's two words, back and test, okay? Now, the regular back test that we all know about is when you back test a strategy, okay? In the stock market term, back test means when you check a strategy using historical data to see how well it worked, okay? So when I say back test, I don't really mean back testing a strategy to see if it works, but I mean more back testing a level, a previous level that has been lost. Okay? So for example, you notice here back in early February how SPY had a double top. Okay? We had a double top. So the 457-ish, 458 level was a very critical level for the SPY. Okay? I'm gonna make this sticker so you guys can see it. Alright, this level right here. Double top. So this is going to be, as I said, is going to be a critical resistance. So on this day back in March 29th, we had a gap out, aka also a breakout. Okay? Because we broke above it. And you can see on this candle on that day, that long wick right off the pink line. Okay? So after breaking out, what do we always want to see? After a resistance level gets it breaks. You want to see that resistance level gets back tested as a support, okay? So in other words, retested as a support. Retest should be the proper term for this, okay? So that's what you want to see. That's what I mean by back test and go, quote, quote. All right? So here's how you use back test and go in a real-time trading, okay? Because it's not enough to just know it, all right? How can we make it practical? All right. So like the word back test, when you want to back test the strategy to see how well it works, this is what we're going to do right now. Okay. So when we lose a support level, this pink line right here, you always want to see, since it was lost as support, you want to see it get treated like a resistance before heading down lower. When it gets treated as a resistance, that is where you look for entry. So let's say it broke down from that support. Okay. And maybe you missed the entry. Maybe you wanted to buy the breakdown and you miss your entry. You do not catch FOMO. You do not catch FOMO. What you can do is wait for a bounce off the next support, which it happened here. Okay? You can enter a call at support. Remember, that's the strategy. You enter a call at support. Okay? Or you can wait for that level that was lost as a support to be treated as a resistance. You can see that right there. Okay? Gets treated like a resistance. When that happens, that is where you look for entry. Okay? If it closes, let's say it lost this level and then it goes back up and tests that level as a resistance, but it closes back above, that's a recapture. Okay? It recaptured that level. That's a bullish. But in this case, it went and back tested that level or retested that level as a resistance. So it went from a demand zone after breaking out to a supply zone after breaking down. Okay, you want to look for entry on the retest. All right, now look at this level. This level right here around 450. Okay, it got treated as support here, got treated as support here. So obviously 450 will be our critical support level. On this day on April 6th, we lost that level. So do you catch FOMO after we break in? Because the best time to get bearish is when you lose a support. So now that we lost a support on this candle, do you catch FOMO? Absolutely not. Remember, this is all in hindsight, but you got to remember these ideas and these concepts in real time and act accordingly. So you don't catch FOMO. After losing a support level, you wait for it to get treated like a resistant. And when it gets treated like a resistant, that is where you look for entry. When it gets treated like a resistant and it rejects, because there's always a possibility that when a support level is lost, it can be recaptured. And then that results in a false breakdown, okay? Which we're going to talk about in a little bit, okay? But when it's not a false breakdown and it loses support and backtests that support as a resistant, that's where you look for entry to short to the downside, okay? So you guys can see it works. It really does. It works a lot, actually. I can literally scroll back and spy and show you so many examples. I talk about backtest and go a lot on my Discord and mention it a lot, on the YouTube. Also, backtest and go doesn't just work for the downside. It also works for the upside. Okay? So you look here. I know there's a lot of lines. Hopefully you don't got a headache. Okay? But you notice this blue line right here. That was one of my resistant levels. Okay? Notice how when we broke above it, it treated that level as a support. You see this wick right here? It treated that level as a support. I had another resistant line at this yellow line around 434. We broke above it. The next day, it treated it as a support. I had this white trend line right here. I'll change the color to yellow. Matter of fact, I'll change it to green. Okay, so it's green. We broke out. And notice the next day, it treated that breakout line as a support. Right here, this white line right here around 442.5, one of my fib levels. We broke above it on March 18th. The next day, treated it as a support to confirm more upside. When it retests or it backtests as a support after taking out the resistance and it backtested it as a support, that's when you look for entry. Okay? Keep in mind, the levels aren't going to be perfect. You use the levels as a point of reference of when to enter. But the market is so noisy that you'll get some fake washdowns below. What most important is where it closes. So let's say you entered, all right? Now on this break, you see it break out right here. Now you want to look to enter on the back test as a support. And it entered. And you see on this wick, it went down lower than 442.5. But notice it did not close below 442.5. If you was to enter on this back test as support and it closed below the support, that's when you cut your loss. Cut your loss right away. Don't hope, don't pray. I believe in God, but don't hope, don't pray that God's going to come save you. Save yourself. Cut your loss if support doesn't hold. But if it does hold, like this candle did, that confirms that the breakout was official. It was good, and it probability increases that it should go to the upside even more to the next resistance. Okay, do you guys understand back test and go? Comment below for me, please, if you understand what I mean by back test and go. It works to the upside. It works to the downside. When it's to the downside, if you see a support is lost, you want to see that support get treated as a resistant. And when it does, that's where you look for entry. Okay? When it's to the upside, you want to see a resistance gets broken. And then the next day, if you're using a daily chart, you want to see that level get treated as a support. Okay, this concept works on all time frames. Obviously, on a 15-minute time frame, it'll work a lot faster. It'll go a lot faster. Okay, I'm just showing you guys on the daily chart. Okay, so that's back test and go to the bull side and back test and go to the upside. What do we need to talk about next? Okay, so obviously I said when you lose a support, you want to bet to the downside because that's bearish. All right, you want to use the back test and go concept to bet to the downside after support is lost, right? So what about the other way around when we get a breakout, right? When you take out a resistant level, that then is a sign to be bullish, right? However, we do get false breakouts and we do get false breakdowns. So let's start with the false breakout, okay? So you see this level, this blue line right here, it was at the 473.5 level. Okay, this was back in November, and it served as a good resistant level, okay, for us for, about over a month into early January. It also served as a support level after we broke above it. Okay, so that's support right here. Okay. However, on this day, on January 5th, we broke back down below that level. So that makes it a false breakout. So what do when we get a false breakout? What does that mean? False breakouts are bearish. Okay? Because remember, the concept is you want to turn bearish when we lose the support. So when we get this breakout over 473.5, therefore 473.5 became support. Okay? So now that we lose the support, we look for the back test as a resistant right where the green arrow is pointing right here. Okay? Same concept, but just the context is a little different. Okay? So same thing with false breakdown. So I got this blue line right here. I'll make it thicker. All right? All the way since October 4th. It was a support. And it served well as support around late January. But notice this long wick to the downside right here on this candle. On the January 24th candle, we had a nice wash below that blue line. Okay, you can consider that a false breakdown. All right, because if you check, the smaller time frame, because you can't see it on the daily, but if we were to check the smaller time frame, you're gonna see more price action around there, and you're gonna see that at one point SPY closed below the blue line, but eventually recaptured it. Okay, so that can be considered a false breakdown, but more on the smaller time frame. But here's one on the bigger time frame. Okay, let me move all this. All right, less lines now. So this blue line right here served as a strong support level for months, and we lost it on February 23rd. The very next day we recaptured it. Okay, this is why it's so important to wait for the back test, because the back test to see if it back tests as a resistant to confirm more downside. So when in this case on February 24th, when it back tested to see if it can be a resistant, it didn't happen. It recaptured it. Therefore, the blue line was then support. We got a false breakdown. Okay, just like a false breakout, except it's the other way around. False breakdown. Okay, and it went up a little higher. Okay, so those are some trading concepts that I just wanted to share with you guys. I hope you found it useful. I hope it helps you guys. These little tricks and tactics and things to look out for. I hope it helps. Hope you found some value in it, and hopefully it helps you to understand Uncle Charters' TA, price action TA, a little better. So other than that, guys, hope you got a great weekend. I'll talk to you guys and see you guys Monday.